what if I told you that one of the most exciting e-commerce growth stories in Europe right now is a company that's been around for half a millennium? Yeah, it sounds like a total paradox, but that is exactly what we're going to unpack today.
We're talking about the year 1520. That's when CTT, Portugal's postal service, was founded. I mean, think about that for a second. That is over 500 years of continuous operation, making it one of the oldest companies on the entire planet. But, just being old doesn't make you a great investment.
And that really gets us to the heart of the matter, doesn't it? This is the central question for this whole explainer. How does a legacy institution, literally built for delivering physical letters, manage to survive, let alone thrive in the age of email and instant messaging? Well, the answer is a pretty radical transformation.
Okay, let's dive into the core idea here, because it's simple, but it's really powerful. CTA is not just a mail company anymore. It's pivoting and pivoting hard into logistics and e-commerce, and it's doing it so fast that it seems like a lot of investors just haven't caught on yet. So let's take a look at how this great pivot is actually playing out. I mean, the company was facing a genuine existential threat, right? The slow, inevitable death of traditional mail. But the response wasn't to just manage that decline gracefully, it was to find a brand new engine for growth.
And this slide just brilliantly illustrates that shift. On one side, you've got the past, traditional mail, with its volume shrinking by a pretty predictable 10% every single year, a managed decline. But on the other side, you have the future, e-commerce solutions, where parcel volumes are just exploding at a 15% annual growth rate. They are actively trading a dying business for a booming one.
Now, here's what's so interesting. This isn't just some 5-year plan for the future. It's already happened. As of last year, for the very first time in its 500-year history, e-commerce solutions officially became the majority of CTT's business. It crossed that critical 50% threshold. The transformation is real, and it is happening right now. So how are they winning this game? Well, they have this incredible, almost unfair advantage, this massive physical network, right? It was built over decades to deliver mail to every single corner of Portugal. Today, that exact same network is a completely irreplaceable asset for e-commerce. A competitor like DHL would need billions of euros and years, maybe even decades, to even think about replicating it.
But here's the thing. They're not just resting on their old network. CTT has made 2 huge strategic moves recently that are basically like pouring gasoline on its e-commerce fire, accelerating this transformation even faster.
Let's break these 2 moves down. First, they bought a company called CTT, a Spanish specialist in cross-border logistics. Boom, that instantly gave them a footprint in 15 different European countries. And second, they formed a joint venture with DHL. Now, this is huge. Instead of competing, the world's largest logistics company chose to partner up, which not only validates the strength of CTT's network, but also secures them a major long-term client.
Okay, I know what you're probably thinking. If this story is so good, why isn't everybody talking about it? Why isn't the stock price at an all-time high? And you know what? That's a totally fair question. The market definitely has some legitimate doubts.
So here are the main concerns floating around. The CEO who led this amazing turnaround just left. Their banking division, Banco CTT, is having a bit of a slow year. There's some new EU rules that might slow down parcels coming in from China. And on top of all that, they're trying to integrate 2 massive deals, CTT and the DHL partnership, all at the same time. These are real risks for sure, and they're causing investors to pause.
And this slide right here shows another big reason for the confusion. Just look at the numbers from last year. The company's core operational profit, it soared by an incredible 35%, but the final bottom line net profit only grew by 11%. Now, if you don't know the full story, that gap can look like a major red flag.
But the explanation is actually pretty simple. That gap isn't a problem with the business itself. It's literally the price of growth. These are one-time costs from buying and integrating CTT and restructuring the company for the future. So the really crucial point here is that the core business is performing exceptionally well, even if the final profit number doesn't totally show it, just yet.
And that brings us to what might be the single biggest, most overlooked piece of this whole puzzle. There is a massive hidden catalyst that could completely change how the market sees CTT.
So, not too long ago, the CEO made this incredibly direct statement. He basically said that a logistics company isn't the best owner for a bank. Now, this wasn't just some random, off-the-cuff remark. This was a massive signal that a major strategic move is on the horizon.
And that leads us to the multi-million euro question, right? What actually happens to the company if they follow through and sell their banking division, Banco CTT?
Well, the outcome could be this really powerful 3-step value unlock. First, with an estimated price tag of over 300 million euros, they could wipe out most of their corporate debt literally overnight. Second, that frees up a ton of cash and management focus to double down on their high-growth logistics business. And third, and this is probably the most important part, it simplifies the story. The market would no longer see this confusing conglomerate. It would see a pure-play, high-growth e-commerce logistics leader, which almost always earns a much higher valuation.
So we're left with this. A 500-year-old company is pulling off one of the most impressive business transformations in Europe, shifting from declining mail to booming e-commerce. All the evidence is right there, but the market still seems hesitant. The final question then is this: will investors recognize the new CCT for what it really is before the story becomes obvious to absolutely everyone?